Good morning, traders. Richard here doing a quick Ichimoku cloud chart market review of the S&P 500 E-minis futures contract. In the last update, we were right up here with that cloud chart test for support there. Support failed. We then identified the downside targets is this low as well as the April lows here. Together with the bottom end of the cloud, we're now getting very close to these levels. We hit the bottom end of the August low there that we pointed out as the downside risk target. And now we're very close to the April there, those two lows there as the next downside target. So far we hit those targets now, and the other one to go for is 5198 is the next downside target here at the bottom end of the Ichimoku cloud. Will be interesting to see if we can start to get a relief rally from this zone. But do remember, this is a weekly Ichimoku cloud of the futures contract, and if we slice through the bottom end here, then we are bearish on the weekly. We're already bearish on the daily. And that's the key risk factor to bear in mind, but very close to the downside risk targets on the E-minis on the weekly Ichimoku. Just on the daily, we hit the 5309 downside target. The next one is 5257, 5193, and 5142. Will be interesting to see if we're going to get support to come back in the market at this level. But we had plenty of sell signals above the top end of the cloud. The last major one was this cloud chart crossed to the downside, and then the rally, the bear rally started because price action below the cloud is bearish, and then we were just trading the support rebound and shorting the rallies as we rebounded from support and hit resistance and then shorted to the downside. So far looking for the 5193 test here as the next critical level to watch out for on the daily, and we get that off the weekly Ichimoku. Let's just take a look at the 4-hour one. For the more swing trade, intraday swing trades, you can see we had a nice little rebound from support here, got through the cloud, a nice little swing trade to the upside there, then to the downside, sliced to the cloud. That was a short selling signal there, another short selling signal there, and then the taps just opened to the downside. We had a cloud chart sell signal there as well. So that's how the 4 hours panned out. But the big picture, the big story is really on the weekly, and the downside targets 5193 and the bottom end of the cloud. Yeah, will be interesting to see if we're going to get support to come back in here and fight for support in the market. Yeah, the long-term sell signal on the daily cloud was a while back, and now the long-term sell signal, the second major one, would be on the weekly for this market rolling over. So watch out for support to come back in here. If support fails here and we start trading below the cloud, then we've got these levels to look forward to the downside on the Ichimoku cloud. Now, just taking a little step back, keep an eye on this standard line of the Ichimoku cloud here. That's a major support zone, so we very close to that zone, basically going to be hitting it. So it will be interesting to see, once again, similar to the weekly, if support will come back in at this level. But there is still significant downside risk to the top end of this level of the cloud, 4008 and 4600. So that would be quite terrifying when we get down there. Recession fears and slowing economy can definitely get us there. In terms of Fibonacci retracements, which is the other interesting thing to do on this chart, see, this rally did pull back to the 38, just close to the 50% retracement, so that's interesting. So now if we're going to project that one on top of that one, basically there, and we moved, so this move, that's a 23% retracement roughly of this entire move. And if we just go back and move this one to there, we can see we're now busy with a 38% retracement, and we can possibly get to a 50% retracement of this move. So from a monthly cloud chart analysis, we are getting close to major support zone between the 38 and 50% Fibonacci retracement, this 5118 zone. And the 5376, so we're below the 5376. We roughly at the turning line of the cloud, 5264 there, and then there's still downside risk to 5118 on the monthly Ichimoku. So not out the woods yet, but would be interesting to see if we do get a relief rally or support at that zone. If support fails at that zone, then 5118 is the next downside target, as well as 4860, and then the top end of the Ichimoku cloud on the monthly. So that's the gloomy picture on the monthly Ichimoku. But as for what we're looking for now is that interaction of the price action right here at the top end of the Ichimoku cloud. And will be interesting to see if support briefly comes back just to technically retrace that sell-off there back into the cloud. So watch out for these levels for support to come back in here. If support fails here, then obviously we're going to go down to the other targets to the downside. Now, if support comes back in here, in and around these levels, then the upside resistance is now these upside top in cloud chart resistance zones. So there's very limited upside there because these significant support zones now would become significant resistance zones. But keep an eye on 5193 to the downside in this current correction. Until next time, happy cloud chart trading. Bye for now.